There's a very interesting trend where people often think a market is very crowded when actually there's enormous room still left in it. And I think that's almost the history of some of the biggest companies on the internet. So the obvious example is something like a Google. When it launched, there was a dozen other search engines, right?
Yeah.
But it's the one that ended up dominating. If you look at Dropbox and cloud-based storage, or Box and Dropbox, at the time, everybody said, oh, it's a crowded market. There's all these other companies, but then there's a lot of room actually for two companies to enter that. And so I think some of the markets that look most crowded from sort of a 10,000-foot view end up having a lot of space still for innovation in them. And in general, what you find is if you have a very driven team, which is approaching the product in a different way or is really focused on simplicity, and if they're able to acquire customers in a new way, then you can actually end up with very outsized outcomes. And so it's actually kind of interesting where I think people almost fool themselves into thinking a market is saturated when it isn't. I'll give one last example, which is the social product space, where very early on people said there's Friendster, there's MySpace, there's Multiply, there's all these other social networks, so why would you ever back a Facebook? Or why would you back LinkedIn? Or why would you back Twitter? And then 5 years later, people are saying, well, now we have Facebook and LinkedIn and Twitter, why would you ever back Instagram or Snapchat or WhatsApp? So I think there are these waves where there's often a lot more room for innovation and advancement in a market than people think a priori, and so people often stop looking at something a little bit too early.
Yeah, we're constantly surprised. Now, of course, Snapchat going into thing, and of course, we're seeing WeChat from China kind of leapfrogging all of these.
Yeah, absolutely. Yeah, there's 2 or 3 large social networks in Asia as well that similarly a lot of people hadn't expected. So
when I look at your investment philosophy, it almost seems like Don Valentine and Cisco thing. Did they have a influence on you? I know they always look at markets over product or team, although that factors. But some other very smart people tend to.
Yeah, I think at least what the early sort of Sequoia philosophy on investing is, at least from what I've heard of it. I've never had a direct tutelage there, but or tutoring there, I should say. But I think that they definitely have been often very market-driven investors, and of course they care a lot about who the founders are and the founding team. But fundamentally, the question is always: is it a good market, and does this product make sense in the context of a market? And I think similarly, Mark Andreessen has had some great blog posts and things that he's written up about product market fit and how that's the only thing that matters, and Ratcliffe's Law from one of the founders of Benchmark. And so I think when I look at a lot of the firms that I really admire in the venture industry, and there's others like Greylock and Coastal Ventures and GC and all these other folks, a number of them also take a market-driven approach, but a lot of people also take a founder-driven approach. And every once in a while that works out, but again, I think you'll see as many failures from great founders as you will from mediocre founders if they're in the same terrible market. It's just the market tends to dominate.